following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's good to be back. And got some things to talk about already. Just Shanghai. Look at this. This is incredible. And you know what this is over? I'm going to, kind of mathematically do some work here really quick. People's Bank of China raised the midpoint rate of the yuan to 6.3966, slightly firmer than previous fix of 6.3969. So you're talking about 0.3 of a point. Yeah, that's exactly what that is. So 0.3 of a point on the currency. And I hope you guys are seeing my screen here. And let me go to our weekly for a second. So we had a 6% sell-off based on that. So a 6% haircut based on a 0.3 of a point readjustment on the yuan. And that tells you how skittish this market is, I guess, on the Shanghai side. But we kind of elevated on air on some governmental fixes, and all the rhetoric coming out of there, and everybody's going to be happy at the end of the day. Talked about them still having a lot of issues, but we also talked about waiting patiently to try to short this index at around 4,100. We never really got there this week. Let's just see how high we got. We got to 4,006, so we missed it by like 94 points on the index. That's pretty close, but you can see how the power of these inflection points are. These are provided right in the scanner, and we were looking at this, and this kind of bleeds into the S&Ps and my argument really right now on the S&Ps. But let me pull up the Shanghai in the scanner, and let me show you. Let's go to our weekly. Where's our Shanghai? It's here somewhere. Here we go. All right. So the deal is this. We've been looking at the Shanghai breadth for a while, and we always talk about, the long-term weekly breadth, which is why we're going to talk about the S&Ps directly after this. Long-term weekly breadth on the Shanghai has stayed relatively negative, and therefore on the long-term trade, especially on the weeklies, we were hoping, kind of in no man's land for a while, and we talked about that, but we were hoping we could gravitate to 4,100, be able to pick a battle as long as this breadth indicator was still negative, right, on the long term. These shorter terms obviously have been, a different animal, and the Shanghai was basically in no man's land for a while. We kind of got above this 3860. That was a little bit of a selling point for me that, I actually got stopped out of this trade, and then we went back and retested and went higher. So now you've gotten back down below profiles, which is nice. Didn't get high enough for me to really enact the short button, which is awful. But right now you've got some technical damage happening again, and now you've got the range between 3860 and that 3550, 54 area down below. And here's what that looks like. So remember, this profile came out because of let's see, July 20th, because we had an indication that we're going to have a new balanced area. That bottom of the box, so to speak, bottom of the profile, bottom of the balanced area, bottom of the fair auction held. We talked about that was where we were going to take off, shorts. That was our target rich environment. We're going to have to wait and see. The wait and see was the 3860, the daily unfair lows, which didn't work out. And then we said, you know what, we can pick a battle again on the short side since we're, kind of in no man's land here in the balanced area on the daily and the balanced area on the weekly. And let's wait for 4,100. Missed that by 94 points. That was awful, as we just talked about. But now you're back at least looking technically challenged on the daily. So are we going to come back and retest 35.54? I don't know, but I know now that you've got another inflection point. If we get any type of pops in the Shanghai around 38.60, I think you could sell those. Remember, and, again, I don't see any conflicting information to think otherwise. I mean, I'm looking at our navigator here on our long term, and, if we could cross the zero line sometime soon in the next week or two, I'm going to feel much stronger about being short this, but I feel pretty good about it right now. And remember, when we look at these levels, so to speak, you're trying to get some kind of edge in the marketplace. I'm going to go back into, here's our Shanghai 180 here, but let me go back to, we got this, Shanghai's not a future, but we didn't know where to put this thing because all the other indices we have in here are futures. Here's the inflection points, 35.54. Here's that 38.60. And here's the landscape view of where we're at right now. There's that 38.60. There's that 35.54. So we hope now on the long-term trade that we can get back into an inflection point that we can pay attention to and is providing some kind of probabilities to pick the battle. And the battle based on the tone of or tide of the marketplace, as Basil would say, with the Shanghai and the breadth and the amount of stocks that are not wanting to cooperate with these moves up. This is a negative breadth situation. It has been. We've been looking for shorting opportunities, but we have to wait patiently. That's the story there. So let's take a look at our futures again. Let's take a look at the S&Ps. All right, as you can see, we're pretty balanced across the board here. Here's where the so-called level of the market is. There's our 240 unfair lows, 2092. We've been talking about that one. There's the 2104, which we hit last night, and that was coupled with that 2102. So again, if I keep picking inflection points, I know I'm going to be right every once in a while. That's just a sheer fact of statistical probability. But I want to kind of revisit what we've been talking about with the S&Ps, and yesterday, in fact, I mean, I kind of try to look at what is the writing on the wall, and there's a couple of things I want to say about the S&Ps right now. Our breadth has turned, and I know we're down a little bit on the futures here, but I'm going to go back to my dashboard, and I'm going to look at our S&Ps. Our breadth started becoming pretty solid, even more so. And let me pull up our weekly. Again, we haven't had a close this week. Okay, haven't had a close this week. But I want to note that, and let me pull up our middle ground. All right, so as our middle ground starts kind of tanking, that's the blue line, and we've had a crossover again to positive. Let me get rid of this middle ground here so you can see it. We had that, June 4th area that was pretty important. And this was all happening while the S&Ps were kind of still up there. Not, we were in the 2120 area, the 2130 area, a lot of this back here in the long term. But, now we're starting to turn breadth positive, and it may not hold, but I mean, we've got some other cooperating breadth tones on the other time frames. But we're kind of starting this process now, coming up already net breadth positive up into this 2104, 2102 area. And I know we hit this last night and backed off, and I understand that the Shanghai sold off over 6% last night for you guys. Daytime when I'm normally over there. And as I look at, across the globe, and I'm going to rank these on my daily. I'm ranking the globe now on the daily. The only positive breadth situations on our daily are the Nikkei, the Nasdaq, and the S&P. Can the rest of these indices all of a sudden flip negative and then the globe's in trouble? Yes. Can we look at this as, wow, let's use the relative strength trading situation. These are the stocks and the indexes to buy right now. Yes, I could take two different attitudes, but I'm not going to disagree with what's going on with the internals. There's been a lot of weird news going on lately. Backing up and looking at the long-term view, this is our long-term weekly view, and understanding how many storms this thing has weathered lately as far as weird news, fundamentally speaking, and now the internals are actually starting to kind of turn a little bit more positive than they have been along this ride in this particular balanced area. Got to tell you, folks, I'm not a big fan of shorting the 2102 and 2104 area right now. That's a huge area. I know we backed off from it 10 points since last night. And there's a little bit of fear in the marketplace. But in my opinion, this thing should be reacting a lot more violently towards the downside. The number, again, to look at is 2085.50 and paying attention to the breadth situation on the S&Ps. I'm going to pull this back up while all this is going on to see if we can get some kind of flip over, at least in the daily or the weekly. All right. I just, I'm not feeling exactly super mega strong about the shorts at this stage. But, looking at our 10-year, which is, historically somewhat of a barometer of what's going on in the U.S. stock market, we've got 127.14, 127.11 still sitting there with a weekly and daily number we have to pay attention to. So that being said, what does that mean as far as the U.S. stock market and the S&P futures index? What does that mean for that? It's concerning for the longs in the S&P that these notes and bonds continue to just kind of drive higher. But again, all this could flip. And I'm looking specifically right now, Walmart's got some bad news this morning. There's no doubt about that. But as I look across this, and I'm going back again to my numbers here, you cannot argue. It's almost 200 stocks in the S&P. This morning we're going to have a little bit of a flip around because we're down a little bit, not much on the S&Ps. 195 stocks in the long term are trading above profiles, and 138 are trading below. On the daily, 181 stocks trading above, 91 trading below. So, you've got to, you don't have too much of a mixed bag right now. And, I'm going to have to wait and see. I know it's hard to sit on your hands, but as we look at these S&Ps, if we get back down into 2085.50 and we're still looking relatively strong on the breadth situation, I'm not opposed to buying that. And I know I've kind of flipped a little bit lately, but we're in no man's land and the breadth has turned relatively positive. And, I have to kind of take that for what it's worth, no matter what's going on with the news out there. So again, we're going to have to wait and see what happens when the market opens. I suggest not trading pre-market right now. Here's the short-term numbers. You got a big number sitting here at 2092.25, and that's, previous unfair highs on the 240 now with current unfair lows. That's a short-term, little bounce area right there. So we're going to have to talk about this when we come back from break. I want to wrap this up and move into some other things.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. And if I seem a little flippant on the S&Ps, I'm just a little mixed up right now. And when I'm a little mixed up, that's as a trader, I've lost a lot of money being mixed up and being in the marketplace before. And it's a time for me to just sit there and wait patiently. Getting some confirmations just to wrap things up back down below 2085.50. I'm just going to feel a lot better about things on the short side if I can see these, internals flip over and get some momentum below this 2085.50 area. And right now, again, it's never a bad thing to sit there and do nothing. Trust me on that one. I mean, a lot of the hosts on TFNN will tell you the same thing. Sometimes it's time to sit still. Again, if we break above and especially have a close above 2102, 2104, and our breath starts to get some momentum on the upside, watch out on the upside because we could spin all the way up into 2126. So again, I think we're kind of, all things considered, a little directionless right here. And the short-term traders, again, 2092, that's going to be a big number here. You got up top 2100, 2102, 2104. So that's the Basil is saying do nothing is a trade in itself, and he's very, very correct when it comes to that. It's difficult to sit in front of the screen all day sometimes and do nothing, but that's one of the things I love about some of the information that we look at, and especially combining it with some things that, the Basil or Steve Rhodes or Tom O'Brien, David White, Larry Pesavento, putting things together in a puzzle. A lot of times, not to digress too hard here, but I was involved in writing a pretty big trading platform, execution platform that Bank of America ended up buying. I ended up going to Chicago after that and being in the board of trade. But when I was completely hardcore writing software, more, for a while more so than trading, we try to put as many indicators on the platform as we could to give people some, technical analysis and, just all the free stuff. And Bank of America, before they bought it, used to get pissed off. They'd go, Logan, these are trade suppressors. We want people to trade more. Therefore, don't give them reasons to not trade. So what they were saying, and that was a greedy broker view, trust me. What they were saying is the more, kind of things that have to line up to give confirmations, their historical view on it was the less people will trade. Now, my view is, for the benefit of the trader, the less you trade, actually, the better off you are. And that's pretty much a statistical fact. Anybody that sits around and does 60 to 100 trades a day is playing with fire. That's my just experience kind of view on this. So what I'm saying is the Larrys, the Basils, the me, the rest of the guys on the TFNN network, if you can, be patient and wait for these biased opinions to line up, you're more than likely going to be able to trade less and therefore put more higher probability trades on the plate. Let me take a look at something here. All right. So if that makes sense, it makes sense the other way when Bank of America's begging me to not put so many trade suppressors on the screen. So take that for what it's worth. They don't care. The big banks do not care. Anyway, here we go. Here's Walmart. We haven't gone back to this in a while, but for a couple of months I was, preaching, oh my God, this thing's showing its hand so easily. That 83.5, 84 general area, we kind of closed below, went back and retested. We haven't had any reasons to take this trade off until we started having some indications around July 6th. I'm not a big fan of trading stocks into earnings, but we a little bit of a writing on the wall there below 72.52. That's the big level here. It was a stock that was kind of the gift that keeps on giving in the scanner. Pre-market, you're trading 69.67. Here's the daily views. Now you're 69.67 is obviously below our daily profiles. And again, is this thing on sale? Is it time to scoop it up? In my opinion, no. We need some stronger indications on a long term and maybe some new profiles to start looking at this as it could possibly be basing, but I don't see that now. Guys, we're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. And again, sorry to digress about the trading suppressor concepts before, but again, it's true. I mean, sometimes it's like Basil said, sometimes the best trade in itself is to do nothing. I take his words at face value, and this is completely true. Another thing, just to kind of had these on my notes to talk about today on the ETF profile grid, the 9 major SPDR ETFs that you can go to spdr.com and just kind of look at all the components if you don't want to look at in the scanner. On the 1 hour, the 4 hour, here's the 4 hour, here's the daily, and here's the weekly. I mean, it's pretty much, well, not pretty much, it's breadth positive across the board on every time frame, pretty much except for the XLE. Now, what does that mean for me? And also kind of considering the talk that we had earlier about our breadth situation, and is this an anomaly that will change over to meet the rest of the globe and kind of arbitrage itself down, or is this the leader that's going to kind of take everything higher? And you want to, in a relative strength trading environment, so we talked about that. So there's not a lot of Discord type scenarios here within the internals of the S&P. I mean, the XLE, the breadth is still negative on our daily we're looking at. This is how we ranked it, but man, it's getting ready to flip over, which I'm just amazed on. So that's kind of hopefully the finishing touches on the S&P talk. Here's Home Depot. I think we're trading 121.70 pre-market. Again, this is Walmart earnings was just a weak stock. You throw in the dice trying to gamble on that beforehand on the long side. You kind of put in more odds or less odds in your favor. On Home Depot, it was a strong stock in a strong market. Again, not a big fan of playing earnings announcements, but we're more than likely going to have a new profile appear at some point on Home Depot soon. You've had some support areas and breakout areas on this recently, but right now it is not a stock that's up too high to short. And should you buy it up here? Again, I'm a bigger fan of for waiting for support and breakouts, and I think the breakouts have already happened before this report. So Home Depot, unfortunately, is a do nothing in my book right now. Let's take a look at the DAX really quick. And again, the indices out of Europe. These are the DAX futures. We talked about this the other day. Here's our short-term 1094.30. Looking very heavy. Don't see a lot of, there's no new indications down here of no new profiles on the DAX. So again, I think this thing could drift lower. Long-term view is down, and you're still looking for areas now. 10945.30 stops above on the DAX. And I would be a fan of doing nothing above there. All right. So let's take a look at this one. I'm sorry. Let's go back to our FTSE here. And let me go to our FTSE futures. All right. So weekly on the FTSE, sitting right at this 6,500 level. That's concerning. It's concerning that we've flipped over to negative now on our long-term navigator at the same time. That's a bearish sign, folks, on the long term. The daily, you kind of come below, retested up above 65.95. Let's just call it 6,600. So again, is it time to buy the FTSE? No. Let's take a look at silver and gold. Silver and gold. Is that the was that the song in Rudolph the Red-Nosed Reindeer? Burl Ives. I cannot believe I know that name. I haven't seen that in 30 years. Here we go. 1491. Here we go. This is support on silver. So, we broke above profiles. We broke stride. This is going to be support on silver now. 1491. We're trading about 15 right now. And the long-term view, again, we had no new profiles attempt to appear on silver. The long-term view was kind of technically challenged when we broke down below and went back and retested 1585. So what do you do with it now? The thing I do like about silver is it did make new lower lows and higher lows on our navigator, which is a divergence in itself. Should you buy 1491? I'm okay with it. I'm okay with that. Stops below on silver. The thing that's concerning about doing that is I'm not that bullish on gold right now. You've got some headwinds right now. We've got a new profile that appeared on gold around 1125. So it's kind of edging up there and not wanting to get away from it. You've also got kind of a support area around 1112 on that we've been talking about on the daily before that weekly profile appeared this week. So what does this mean for silver and gold? Final stance on it. I'd love to see gold really break clean and clear of 1125 to really consider that the trend may be changing on gold. That being said, I think you got a short-term bounce opportunity in silver around 1491. Okay. All right. So that's the story there. I want to get back to something I've been monitoring pretty heavily. IBM. This is a stock now. Again, I'm trying to stay with the short stance on here. Stingier traders would have to start looking at this as a stop out now, 155.88. Yesterday's action, we're trading above there. This morning, we're trading, looks like 155.51. I'm trying to stay personally short up until using this balanced area on IBM. I get a lot of emails about this, by the way. That's why I'm mentioning it. 158.20 is kind of my collection area up top. So I'm trying to look at this more as a long-term trade and trying to withstand any type of bounces in it, but calling it quits above 158.20. Let's take a look at Tesla. All right, so 253.91. This is, what we talked about, placing stops are well in order always. And we looked at this. We got a pop above this 245, 244 area. Now you've got to just sit tight on Tesla. Here's our 240s on Tesla, just to give you some numbers. 257 up top. That's a little bit of a resistance area that was predicated right when that orange bar hit. And if you're going to day trade, that's where you got to put stops above if you're short in Tesla. I'm not a big fan of going long or going short stocks right now. It's a little bit of a mixed bag. I mean, on a collective stance, there are some opportunities to go long and go short. And what I'm going to do right now is, if I'm going to go long, I'm going to try to look at the stocks that are showing some strength and possibly have pulled back. I'm going to pull this up. Pull back into, or just breaking above, long-term view green, trading above profiles, next leg down, sitting right at the top. So you may, be at a high probability inflection point area with this. So I'm going to take a look at Coca-Cola Enterprises. Forgot to put the Enterprises on the end. CCE. Let's take a look at that one. All right, so long-term view, wow, no mystery there. And you've got a situation where we're at the top of our profile, 53, and you might be saying, well, why didn't you tell me about this when we were trading 45? Actually, this was on the radar screen when we broke above 46. Let me pull that up. Then you were kind of spinning around, obviously, and you had to look at your shorter term profiles of 240s, all right, to try to regulate this trade up. And what do we do with it now? In my opinion, you still got some more upside in this, believe it or not. The 53 area, we're trading 53 pre-market right now. This type of classical technical analysis pattern is a continuation pattern. I don't see anything standing in the way with it. If you're going to buy stocks, you want to try to play around with strong stocks on the long side and weak stocks on the short side. But that's one that I just used by using top as just to find things that were sitting around the inflection point at the top that may have some kind of breakout action involved. Let's take a look at Harris Corp, HRS. And again, I've got a certain particular sort in right now to pick these out. All right, so we're consolidating around unfair highs on our profiles here, and we're looking at. Let me just kind of pull this back up here really quick. Harris Corp, as you can see, is in the XLK, and it labels what ETF they're in right there in the type. So I'm going to look at the XLK really quick. I'm going to digress over here really quick, and I'm going to take a look at the XLK. All right, so. Forgot to do what I was going to do here. The XLK. So the XLK is relatively strong. It's not the strongest ETF that we've got out here. It's kind of mid-tier on the short term, medium term, long term on this profile view. So, the sector itself is not in bad shape. This is obviously something that's sitting around top inflection points, but let me do another sort here for you. Let me go into the XLK, and let me do something where we're trading above the box. And if I'm looking to buy strong stocks in this sector, there's Harris Corp. Even though we did a sort before, it's just showing green top weekly, green top daily. You've got some, and those are the ones that are sitting right at the battle point areas. We've got F5 Networks, FFIV, Adobe Systems, Citrix, Motorola, Visa. These are ones clean and clear of profiles on both sides. And, in my opinion, if you're going to trade these from the long side, you can orient stops around these unfair highs on the daily. So there's one that's got a one by it, Xerox Corp, XRX. Let's take a look at that one, XRX. Okay, without question, some news. This one I like. I mean, this one breaking stride for the first time, getting above 1134. Pre-market, we're trading 1140. We kind of busted up on the dailies too. I mean, really, if you're going to put a gun to my head and force me to buy something, Xerox with stops down below 11 probably is going to be something in order here. Just give it a little bit of room to wiggle around. And I think we're what are we trading, 1120 pre-market? Is that true? Yeah, so the support area, the initial support area is 1116 and 1134. What do you possibly hope to gain out of this? I'm thinking somewhere in the 1350 to 14 area if we have any follow through with this. But again, put your stops in on Xerox. All right, let's go back and rank these things again. XLV. Let's take a look at some of the stocks in the XLV. This is the healthcare sector. And as we cruise down here, this has kind of been the darling of the long world. It's been but you've got some things that are kind of showing themselves as weak situations. These are the ones that are, to be stayed away from without question. BDX, BIB, Celgene, starting to show some cracks here. Let me take a look at that one. CELG. All right. Well, you could look at this two different ways. Let's just take a look at it. CELG. We're going to try to pick the right way, by the way. Strong stock profile appeared below price action. And it's actually told you this. Let me pull this back up here. Celgene. All right. See that 8? In a continuation pattern, it's saying that for 8 weeks, it's been a long-term trend up. Okay, so as soon as it broke out here, on the daily, there's 1, 2, 3, 4, 5, 6, 7, 8, and we've actually had a profile appear below price action, and you're sitting below profiles on the daily, but the good news is here, in my opinion, you get a close above 130, 155 on the daily. All things considered with what's going on in the weekly, this stock could continue to go higher and eclipse that 140 area. The only thing concerning here is the market's a little discombobulated right now, the market in general. So, again, you're going to have to keep the stops in on these things right now. This is definitely going to be a stock picker's market for a while. I used to hate people that said that. It was almost the fallback phrase. Well, it's kind of, there's some risk out there, there's some volatility, and it's a stock picker's market. You can't be wrong saying that. All right, let's take a look at a couple other things here that are on the radar screen of the XLV. Let's take a look at something that actually is not doing that well. We're going to take a look at this when we come back, guys. I hear the music. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. We've got about 4 minutes here before you go to break, and then Mr. O'Brien is back, which is awesome, I'm assuming. I think I see him in the den. XLE, let's talk about this for a second. We talked about this new profile appearing here. Oh, excuse me, Larry's next, then Tom. I'm an idiot. Larry is next. 6740, bottom of the profile on the weekly on the XLE. And, there's a couple of things I like about this. We talked about it yesterday. 75, a rally up into 75 on the XLE is not out of order just for this thing to kind of cruise in the entire fair auction. And, I like the way this thing's consolidating up here, breaking profiles on the daily. We've talked about this. I also like the fact that the XLE, was the turning point before in crude oil back in March. We talked about that. If you missed a couple of shows that we've done, let's take a look at crude oil. And you might be saying, if you just look at crude oil and don't take into consideration, you might be saying you're an idiot. But we've got a divergence here on crude oil, higher highs on Navigator, lower lows on price action on crude oil. And throw in the bearish sentiment seemingly of everybody on the globe and the Iran thing and economies possibly slowing down, blah, 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 driving season being over. I want to see a new profile appear on the daily. I want to see a hint of that profile attempting to appear with that orange situation. I'm going to go to my futures section. I'm going to show you on crude oil. A little bit of a green shoot there on the 60, but who cares about that? I want to start seeing some yellow peelbacks happening, just like we do on well, on the futures, we only got them on 60s here. Just like on Cocoa on the 60-minute, that yellow peelback bar. I want to see that happening on the weekly or daily, and then literally I want to step in and put some stops below those inflection points that are being attempted to be shown, or ones, or just, look at our 240 and look at that bottom of the profile as a stop area. So again, let me repeat that. I want to see some green shoots obviously happening here on the shorter term time frames. I want to see the 240 get green, and I want to see a new profile attempting to appear on the weekly and daily. And then I'm going to orient some stops around the 240 unfair lows and try to hang in there for a little bit of a bounce on crude oil. That's just the way I'm looking at it. Let's revisit the S&Ps here. We're down about 3 or 4 points pre-market. We obviously hit to the tick that 2104, 2103.75 last night. We talked about 2102, 2104 being the big resistance area right now. But as we look at this, and as we look at our internals on the breadth, just to give a little recap, going into our S&Ps, here we go. It's some of these stocks are starting to open. We've got an imbalance on the upside. That concerns me. We've talked about staying out of the market right now, letting some clarification hopefully happen. If we start getting above 2102, 2104, especially today on a close, we could race up into the 2126 area over the next week or two. So I'm just going to pay attention to that. I'm going to, wait also if we can just sit tight, and if we can gravitate down below 2085.50, close down below there, I'm going to start wanting to play around with this again, possibly on the short side, while at the same time making sure my breath is giving me the go sign on stuff like that. Stay tuned, guys. Larry's next.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.